Matt Justice for Tackle Trading and the Forex Report for the week of January 5th. This is the first Forex Report for the year of 2015. It was a banner year. In 2014, Tackle Trading did some great things. Gino Scouting Report, my Forex Report, changing lives and making a lot of people money. Last week in the market, and for those of you who are new to the Forex Report, basically I analyze the major currency pairs every single Monday from a swing trader perspective, not a day trader perspective. That's vastly different, and even long term is a little bit different as well. But we'll look at some long-term charts for those of you looking at potentially making some longer-term trades in the currency market today as well. But I do want to recap last week in the market. Last week we had an ongoing US dollar Swiss franc trade that is currently up last week alone 202 pips from the call last week until this week. The Australian dollar US dollar, we closed at a profit, good little profit on the Australian dollar, but we did close in and hold. The US dollar Canadian dollar ongoing long. Last week it made 159 pips, and we got a hold on the British pound US dollar. The Euro US dollar ongoing short is currently up 265 pips from last week alone. And the ongoing long trade on the US dollar Japanese yen, so, kind of slowing its momentum a little bit. We lost 79 pips on that one for a grand total last week. Oh my goodness, 547 pips. Now, for those of you who are new to this and don't understand what a pip is literally about, in the US, it's about 0.5% per pip. So let's say we put $2,000 in each trade. You basically, that would be a standard lot. And so we would control $100,000. Each pip is about $10 on a standard lot. And so if you put $1,000 into the trade, each pip is about $5. If you put $500 into each trade, each pip is about $2.50. And if you put, say, $100 into a trade, or let's put $200 into a trade, each pip is going to be right around $1. All right. So let's do a little bit of math. Just last week alone, guys. Let's say you did a standard lot. You controlled $100,000. That is $5,470 last week, just on those trades. $5,470. I bet you could have paid for a few pro subscriptions with that one. Okay, if you put just a $50,000 position on, that is right around $2,730 on just those trades alone. If you put a $500 position size on, that's going to be right around, what would that be? About $1,200 last week alone, just by putting $500 into each position. That is the beauty of the Forex Report. That is the beauty of trading currencies. It's a highly leveraged tradable instrument, but it's doing absolutely fantastic. And honestly speaking, I love doing it. I do it anyways for my own personal self. Now, again, couple rules for the Forex Report. If I call a long US dollar, short Swiss franc, and a long Euro US dollar, I probably typically only take one of those trades. I don't do them both because the same economic analysis will impact both trades a little bit. And so I want to make sure that's fairly clear. I'm also going to start increasing more currencies and analyzing those currencies against that as we do the Forex Report down the road as well. A pip is just the minimum price fluctuation. The tick value is the amount of money you make per pip movement in the market. And typically what we analyze in the currency market is we analyze a $50,000 position, which is $1,000 into every trade, just to kind of make the math easy for everybody out there. So now let's go into the Forex Report and let's pull up MetaTrader here. MetaTrader is the Forex system that I use in placing trades in the currency market. When you place a trade in the currency market, it's actually fairly easy, and we'll kind of do that as we go on here today. So the first one, we have an ongoing long trade on the US dollar Swiss franc here, and a lot of good news here on the Swiss franc US dollar pair. Obviously, the open of yesterday really kind of helped, and I see this continuing going up. However, However, I would strongly recommend you trail that stop loss. So we're going to call for an ongoing trade, but we're going to trail that stop loss up right underneath the dollar level right there. So we made this trade originally back into this range. We also made it here. We also made it there. So we made a few different trades on the Swiss franc since the beginning of the currency report. So our first one was back into here, and we're up about 800 pips since that first one. But again, we get in, we get out, in that type of capacity. And so I would recommend, if you did make this trade, it's tough to make it already. It's already overextended. It would not shock me to see the dollar retrace back down against the franc. And so let's trail that stop loss up right below the $1 mark. That is going to be a significant barrier for it. So we're going to call for an ongoing long trade on the Swiss franc with the trailing of the stop loss right below the $1 mark. So that's what we're going to call on the Swiss franc. On the Australian dollar pair, we actually called the dogs off. We made this trade way back here into this right when it broke down. Let me get my crosshair so you can see it a little better. Right when it broke down right there, this is where we made the trade. And we just called for an ongoing, and then with this upward movement in price, we called for that to pull the trade off. So right here, we called for that to pull the trade off, and that was at about the 0.81 level. And so you're talking about a significant movement in that over the course of the last 4 or 5 weeks. And I still want to call the dogs off on the Australian dollar. I want to kind of see how things play out there in the market first and foremost. So I'm going to continue to hold the Australian dollar. Again, that's from a swing trader perspective. Day trades, go to bed trades, those are a little different. The next pair, US dollar, Canadian dollar. Let's look at this pair here. We did benefit greatly from that. I do not like the movement I'm seeing today in the Canadian dollar, US dollar pair. This is obviously the US dollar. Exploded in value yesterday in the market, as it kind of did. And on Friday, we benefited greatly because we had an ongoing long trade here. I don't like the price movement here in terms of the analysis I'm looking at. That is a bearish candlestick, and it looks like it's starting to garner a little bit of momentum. So I am going to call off the dogs on the Canadian dollar. And I'm going to say we're going to go hold on that one for right now. So we got an ongoing Swiss franc. We're holding on the Australian. We're holding on the Canadian dollar. The British pound here, we called for a hold last week on that pair. We saw a little bit of slowing momentum in this area right there. Obviously it would have worked out, but we were short euro anyways. And right now, I love the price movement right there. I love the breakdown. That's, if you could have made that trade on Friday, that's probably where you do. And truth be told, I probably see the British pound continuing to go down. It's just really tough to enter into a swing trade if it's already moved this much. And so if it's already moved 219 pips in just a couple days, that's a lot of momentum behind it, but I probably wouldn't swing trade that. I'd probably day trade that a few different times, but as for a swing trade, probably going to kind of continue to hold on the swing trade on that one as well. The euro dollar pair, okay, we called for a breakdown right into this level, ongoing on the trade, and so we are currently short the euro. I see no reason right now to stop that. I do want to trail the stop loss down right above the 2.0 level. So right above the 2.0, maybe 20 pips above the 1.20. That 1.20 level is such an important number for it, and it really dates back to the lows of 2011. It also dates back all the way. In fact, it touched briefly the lows of 2006 before it rebounded a little bit. I do see the euro being fairly weak over the course of the next little while, and so I am going to call for an ongoing short trade. Entering into it, it's already moved quite a bit, guys. It's already moved literally about 300 pips in the last week alone. So we want to kind of be cautious about entering into that trade, but at the same time, if we did make that trade, great trade, trail that stop loss down below the 0.120 or excuse me, above the 0.120 level, and that's on the euro. And then the last pair, the Japanese yen, and the Japanese yen is really kind of slowed down. For the first time in the Forex, this has been the number one pair we've had over the course since the beginning of the Forex Report. We've been widely successful on it. We've made more pips on the yen pair than we've had on anything else out there. But at the same time, price action doesn't lie, and we are slowing down a little bit. I do see long term the yen really kind of going to about, or the dollar really kind of going to about, I would say 130, 135 even, and that's tremendous movement. But at the same time, in terms of the swing trade, let's kind of wait and hold off. So I am going to call for a hold on the Japanese yen. Now again, these are swing trades, so we got two ongoing trades. We are not calling for the beginning of a new swing trade, so we got two ongoing trades in terms of the long franc and long dollar against the franc and the long dollar against the euro. So your short euro there. Outside of that, swing trade are kind of being put on a hold right now with the expectation that we're going to start to see some price movement out there in the market. However, that doesn't mean we can't get out there and day trade, go to bed trades, bank open trades, day trades. Well, there's a lot of economic news this week in the marketplace. So if we pull up the trade center right there and we go to where it says economic calendar, let's hit that economic calendar here. And as you can see, we have a tremendous amount of news in the market this week. But let's go to the Forex calendar very quickly. It'll take us to Forex. Should take us to the economic calendar. Okay, so just this week in the market regarding the US dollar, we have unemployment, we have the FOMC minutes, you have manufacturing. Those are all massive economic reports that's going to drive the market tremendously. But if you include all the other currency pairs that we typically look at and we apply that filter, as you can see, we have a very, very big week in the market. You have the British pound announcing interest rates on Thursday. So if you're trading the pound, that's going to be a very, very important statement there. The Canadian dollar has its unemployment report on Friday as well. You have a couple trade balances between the US dollar and the Canadian dollar on Wednesday, and then you have the CPI report, which is an inflationary report for the euro on today. And so we got a lot of economic news. Expect a lot of movement in the market. A lot of great news-based trades out there this week. A lot of day trades. Just not a really great week to get out there and swing trade. So I'm only going to call for ongoing trades here, nothing to get into this week. So, that's just the way the price action kind of moves in the currency market. So hope you enjoyed the Forex Report. We'll bring you another one next Monday, and happy hunting out there in the market. It's going to be wild, crazy, and volatile. This is Matt Justice for Tackle Trading. Check us out at the website www.tackletrading.com.